My name is Paul Henley. I am from Dallas, Texas. I'm the founder and CEO of Heritage Oil and Gas Company. And my background is in the securities and investment banking industry. For about 25 years, I worked with a couple of major wirehouses, and then on and became a principal of a couple of smaller firms who work primarily in helping companies achieve public listings and early stage financings. I came to Dallas 18 months ago to help some people that I knew monetize some assets that they had. That particular program didn't work out, but I learned a lot about the oil business and put together a pretty strong team, I think, that has a tremendous amount of experience, not only in the oil and gas business worldwide, but especially in the areas that we're working in East Texas and Central Texas. Basically, what we're doing is we're looking for distressed properties. I know some of this kind of might seem like deja vu with the other presentations, but in the East Texas field is one of the largest fields ever in the history of the world. It was founded in the 30s by the Hunt family, and some of these wells, to give you an idea, in that the East Texas field proper had about 40,000 oil wells at one time. It's down to about 18,000. In the early 90s, whenever oil prices collapsed, most of the majors left the field. The Hesses, the Chevrons, Sohayos, when oil prices were $5, $8, $10, and they just basically walked away from thousands and thousands of these wells. What we're doing is we're going in and buying these wells from the existing property owners and royalty owners and putting them back into service. Most of them are equipped, the wells that we're buying are equipped, and the margins that we have are pretty good, and I'll get into that in a second. Basically, these stripper wells, which initially came in at 1,000 plus barrels a day, are currently producing on average between 2 and 4 barrels, around 2.5 on average, but the decline rate's very, very small, so they'll be producing this amount of oil for the rest of my life and then some. The two areas that we're focusing on are East Texas, the East Texas field proper, which is where our first two sets of leases are, and then also in a second we'll get to the Abilene area. But as you can see, the majors were there. They abandoned it when the prices were lower. It created a big opportunity for a lot of people. So what happened is a lot of small independent companies acquired these properties with the idea of eventually getting around to fixing them up. I told my wife it's like the guys that have the cars with the gray Bondo on them that they drive for years. They're eventually going to get around to fixing them up, but they never do. Well, the Texas legislature came down on the Railroad Commission, which is the overseer of oil development in Texas, about 1.5 years, 2 years ago, and basically said, these wells are going into production or you're plugging them. So that put a huge amount of financial pressure on these lower resourced owners of this property. So now they're all scrambling. The music stopped, they're all looking for a chair. So what we in our investor group came in and kind of as a rescue, we looking for the right types of properties that have upside, that have equipment that we feel have good potential, and buying them at a very reasonable price, putting money into them, getting them pumping again. And our first 3 wells on our first 3 reworks just went into service 2 weeks ago, and we sold our first 2.5, well, actually almost 3 loads of oil last week. So we're in business. The second area of concentration, which essentially, if you could look at Texas, we have a concentration of 100 wells more or less in East Texas, and now 50 wells in Central Texas in the Abilene area. The end result is very much the same, although they're not technically, designed stripper wells or stripper wells by defunct. These are wells that just have lower production, very shallow, but it's a blanket formation there in the Flippin Sands, and it's very inexpensive to get to. And we've acquired 7 leases there that have production capabilities, we feel, at a minimum right away of around 100 barrels, helping get our overall production from the current level up to around 300 barrels a day. We'll get into that. Also, we own the rights all the way down to the center of the earth, and there's several other pay zones there. John Bell, who's our petroleum engineer, who's been in the industry for 20 years, worked 12 years with ARCO. He's drilled all over the world from the North Slope of Alaska to the Gulf, who's actually there today. I was going to bring him today because he's the real oil guy, but what he's doing is more important for our current shareholders in getting these wells in production. Currently, we have basically 3 sets of leases, the 2 sets in East Texas. The first set is just got online, as I mentioned, doing about 15 barrels, the first 3 wells, 15 barrels a day. An additional 19 leases we just acquired a few months ago is currently fluctuating between 10 and 15 barrels, but there is 43 well bores. We feel pretty confident. It's very similar. It's the same pay zone. It's the same 2-county area in Gregg and Rusk counties in Texas. We feel that also has a target production capability of 125 barrels. And then the Big Country Abilene properties, which we have the 8 leases, 1,500 acres, 41 well bores, very low current production, but you know, we feel with some enhanced oil recovery programs, getting a lot of the wells that are offline back online, and then eventually down the road drilling in these shallow sands, we'll be able to get the production up there at a very reasonable cost. Typically, this is what we come across. We come across wells that have been abandoned or out of or disrepair. Sometimes there's small problems like electrical or flow lines, little things, and sometimes there's more to it than that. We have to actually equip them, clean out the wells, get them stimulated, and then recomplete and get them online. Sometimes you need to put tank batteries in. You know, there's a myriad of things, but for the most part, these wells that have proven producers for years and years, and oil at $85 and above, it's very profitable to get those wells back in service. So it's not a matter of, with these particular properties, is there oil there? It's a matter of, how much oil are we going to be able to get out of those wells and at what kind of profitability. In general, someone said that $100,000 a flowing barrel. That may be true. In East Texas, I think our experience is more like $50,000 to $75,000 if you were to buy production. We're charged with the task of being able to go and get these properties with an average of about $20,000 per wellbore, getting them back into service, and having our average cost of flowing barrel per day in the $15,000 range instead of the $50,000, $60,000, $70,000 range. So we have an economic advantage there. The 3 main initial partners of mine are Matthew Veal, the CFO, who's been CFO of about 6 or 7 public companies. As I said, my background is in public companies. My charge is to get this business off the ground, have a good cap structure, which I think we have already. We have about 1.2 million recoverable barrels of oil. We have less than 5 million shares outstanding. We are getting ready to file an S-1. Our auditors from Sherbin Company have begun the audit, and that's what our goal is down the road. John Bell, our petroleum engineer, like I said, Colorado School of Mines graduate, worked for ARCO for 12 years, was assigned to Plano, Texas, outside of Dallas in their research facility, and then they moved him into the East Texas field where ARCO at that time in the early 90s had 420 wells. They asked John in the mid-90s, before ARCO left the field, to move to Indonesia. He said no thanks. He's been in the field ever since. So there's not a lot of petroleum engineers that have had 20 years experience in the East Texas field and the global experience that John brings to us. We also have a couple of gentlemen on our board. John Burns, who's a reservoir engineer, worked with Exxon and also was an engineer independently, who was started the company that's with the forerunner of Neville and Sewell, which is a very famous reservoir engineering firm. Another gentleman, Steve Dow, who's our corporate counsel, has been in the energy business his whole career. He's been a judge in Texas, as well as an attorney doing corporate work in specializing in title work and land work. So I've been involved with several small public companies. The last company I was with, we took it from a business plan to about $80 million in revenue. Basically, what we're doing is, it's kind of simple. It's not that sexy, but it's very profitable, and we think down the road it's very scalable. But what we're trying to concentrate on, and what we are concentrating on, is to create revenue. And all the reserves in the world don't do you any good if you can't monetize it. So we want to be able to keep the lights on, take our shots down the road with acquisitions that are accretive. And it's certainly scalable. We have a relationship with several New York banks. Aegis Capital is actually an advisor to us, and we're just not at the size yet where we can utilize their services. So what we're trying to do is take the existing properties that are currently doing a little less than $50 a barrel. raise $1.5 million for CapEx to get the first 75 in service at an average of 20,000 per, which will give us, with that, somewhere in the 150 to 200 barrel a day range. We can then go raise money for the second phase at a higher valuation. By that time, hopefully our filing will be effective, and we can do an equity raise and grow from there with the right types of acquisitions. I neglected to say that we own 2 rework rigs, one in East Texas and one in Abilene area, so that we can conduct the reworks at a much more favorable economic rate than someone that's hiring everything out. Running a rig, even a little pull rig in East Texas, is costing about $450 to $500 an hour. We operate ours for about $100 an hour. So in summary, this is our objectives. We want to get the S-1 filed sometime by the end of the second quarter. We're not in a tremendous hurry to trade, but we do have shareholders that want to see an eventual exit strategy. Plus, it helps us with our acquisition strategies down the road. By the end of this year, if we can hit on all cylinders, we can get the existing 140 plus wellbores we have. Even if we can get 75–80% of them operable, which we think is doable, we should be in that 250 to 300 barrel a day range with very favorable cap structure, very little debt, and very small amount of shares outstanding, which would then give us the opportunity to do a larger raise in the 10–15 million to really put us on the map and still have a cap structure that will sustain a national exchange listing, hopefully. And that's basically what we're trying to do. I've got a summary of the convertible note that we're talking about, but if any investors would like to talk about just becoming a small shareholder or even becoming a direct participation partner in either the projects we have now or some of the ones we're looking at, we'll entertain that as well. So basically what I want you to take away from this is we've got a strong management team that's been in the public market before. They've taken companies public successfully. We've got a strong oil and gas group, and we've got a business model that is, I think, although it's not as sexy as drilling or getting the big numbers coming in on a production, it's very sustainable and it has a lot of cost advantages in it, and it's easy to understand. And we'd love to have you come and look at it too.